please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, the GST Council is likely to consider levying a sugar cess of up to 5% when it meets today. And ahead of that meet, CNBC TV18 learns that some states are not on board with the idea. Timsi Jaipuria joins us now. Timsi, what are these states saying and why are they opposed to the idea of a sugar cess? And also take us through the other issues that the GST Council is most likely to discuss today.
Well, it's a packed agenda for the GST Council this time, starting from sugar cess. What we understand from sources that the Council is going to deliberate upon whether to levy a sugar cess or not. The officers' meeting, states are divided and the Council does not seem to have any unanimity on application of this sugar cess. Now, the proposal is, the idea behind levying a sugar cess is that to compensate the farmers and the sugar manufacturers. But the states which are non-sugarcane growing states, they have opposed this. For example, Assam, Tripura, etc. They're saying that this would mean cross-subsidization and they are not in favor of levying any other cess. Not just this, the Council is also going to deliberate upon the idea to incentivize digital transactions. Up to 2% of instant cashback is what government is mulling, capping at 100 rupees. That is, a consumer can avail only a maximum of 100 rupees of cashback per transaction. Not just this, the Council is also going to talk about GSTN conversion from a private entity to a public entity. Under this proposal, government is going to take a decision on converting 100% stake into a public entity, where 50% will be held by the government, central government, and 50% by the states. Not just this, the Council is also going to deliberate upon and give an in-principle nod to the broad principles and agenda points of forming a new simplified return form. GOM headed by Sushil Modi is going to submit its report, which is a fusion model of what Nandan Nilekani suggested and what tax administrators were suggesting. So let's see what actually comes ahead of the GST Council. But yes, it's a packed agenda.
Absolutely, Timsi. It's a packed agenda. We'll keep an eye out on all the announcements from there. But let's shift focus back to the markets. Yesterday on the Lal Street, it was another volatile day of trade. The last hour dip pushed the benchmark indices into a negative territory, but not before we saw a bit of a recovery. But intraday, the Nifty did breach the 10,700 mark, ended 39 points in the red. The Sensex too ended 74 points in the red. Nifty Bank, that one outperformed. It was the Nifty Bank weekly options expiry. Mid-caps continue to underperform. So how is trade set up today? Sonia joins us with all the cues. Morning, Sonia.
Hi, good morning. Thanks for that. Well, you know, for the bulls, the good part is that the Nifty has been holding above the 10,600 mark. And yesterday as well, although we did see a lot of volatility, there was a recovery from the lows of trade. So the Sensex managed to recover about 150 odd points. Now, the star for the last few days has been the Bank Nifty. Yesterday, or rather in the last few days, it's managed to conquer that hurdle of 25,600. We did see outperformance for 2-3 days in a row, and stocks like ICICI Bank, Axis Bank have been leading it from the front. In fact, yesterday it gained for the third straight session. So do keep an eye out on that, whether it continues to assume leadership or not. The mid-cap index is the one that people are worried about because a lot of over-leveraged positions are now coming off. We did see the mid-cap index close over 1%, lose over 1% in trade yesterday. We also saw selling both from FIIs and DIIs, so that's something to be a bit worried about. FIIs sold about 150 crores in the cash market. DIIs sold almost 580 odd crores, and that's a bit, a spot of bother, maybe some money being taken off. The US markets also have been hit by a bout of volatility over there. We had the Dow that the Dow closed flat, but not before a really wild swing. It erased a 400-point loss, recovered from the lows, and Tesla was a stock to watch. Post its numbers, it was not the numbers that was the news maker really. Elon Musk in the conference call refused to answer any questions on forward-looking statements, etc. And some data questions were asked. Because of that, because of his refusal to answer that, the stock was just plummeted. So that's another thing to watch out for. But all in all, you'd have to say it's largely range-bound with a bit of volatility in our markets.
Okay, range bound with a bit of volatility. But Sonia, you did mention about a few stocks. What are the other ones that you're looking at?
Well, I'm looking at a few that came out with their numbers post-market hours yesterday. Hexaware is the first one. The revenues were a beat. The dollar revenues were up about 3.9%, but the margins were a miss. Castrol came out with an unimpressive set of numbers. No growth at all. Margins were absolutely flat. The revenues were up hardly 5-odd%. Adani Power is a stock that I'm going to watch because the losses have narrowed for the company this time around. The losses have come in at 660 crores versus a loss of almost 5,000 crores previously. The margins have improved, so maybe that stock could be in the green. HCC, the losses have mounted over there, so I expect the stock to be under further pressure. L&T Finance, similar to the others in the NBFC space, L&T Finance has done very well. Highest loan growth in the last 8 quarters. The disbursements have also gone up about 24%. PNB Housing was not bad, revenue growth of 9%. JSW Energy continues to posted a loss this time around, a net loss of 480 crores versus a poll of a 60 crore profit. So that's something that could disappoint the street. Imami, we saw a good volume growth, almost double-digit volume growth, 9% coming in versus expectations of 7 to 8-odd%. And in the broader markets, do watch out for Tirumalai Chemicals. That stock has been on a tear, over the past couple of months, and very strong earnings. The margins have risen substantially to 19.5% versus 14.3% earlier. Back to you.
All right, Sonia, thanks a lot for that. We'll keep an eye out on all those stocks. But let's take a short break. Come back. We talk about Lanco Infotech. That one faces liquidation as its resolution plan fails. Welcome back. This is Bar Breakfast on CNBC TV18. Lanco Infotech, one of the first 12 stressed assets referred to the NCLT under the IBC insolvency proceedings, that is, last year, may soon be headed into liquidation. Ritu Singh joins in with more on this story. Ritu, this is a big setback for the company and its lenders. What now?
Well, it looks like liquidation it will be for Lanco Infotech, which is one of the largest assets identified by the Reserve Bank of India in its first defaulter list to be sent to the NCLT in June last year. Now remember, Lanco Infotech has claims of over 50,000 crore rupees from secured and unsecured creditors, and due to a failure of arriving at a consensus on the resolution plan that was submitted by Triveni Earth Movers, it seems that the company has no option but to be headed into liquidation. We understand that only 16%, that is 16% of the lenders, voted in favor of the resolution plan that was submitted by Triveni. We understand that their offer was about 1,400 crore rupees in cash and remaining 38,000 crore rupees as liability that they would assume that was the debt of the company. But this plan was not acceptable to most of the lenders, and therefore the resolution professional will now refer this case to the Hyderabad bench of NCLT for their consideration to send the company into liquidation, and also a revised offer which we understand has been submitted by Triveni as on the 1st of May. So both of those options will be weighed by the NCLT bench when it gives its order for liquidation. But for now, with the lenders not really approving the plan that was submitted, it looks like liquidation it will be.
Okay, looks like liquidation is likely for Lanco Infotech, but it's time now for a quick break. Up next, Tata Motors will sell its defense and aerospace portfolio. Welcome back. You're watching Power Breakfast on CNBC TV18. Well, Tata Group's defense play is taking shape with Tata Motors board approving the sale of its defense arm to TASL, which is Tata Advanced Systems Limited, as did Tata Power earlier. Now, Nisha is here with all the details on that. Nisha, you have been telling us about this particular deal in the making, but now it has been finally announced. Tell us, what are the details?
So, Anisha, this is the first cluster formation under N. Chandra at the helm of Tata Sons. And defense company is really taking shape with the restructuring in various group companies, and namely Tata Motors and Tata Power. The Tata Power board has earlier already approved hiving off its defense business to TASL, which is Tata Advanced Systems Limited. Yesterday, Tata Motors board has also agreed that they will be selling specialized defense projects business of their company for 100 crores upfront payment to TASL. Apart from that, they will also get 3% revenue generated for the next 15 years, amounting to 750 crore rupees or less. Now, remember, this means that Tata Motors will continue to have revenue but will not have to take the capex on its head. The other arm under Tata Motors is TAL Manufacturing, which will also be sold to TASL for 625 crore rupees. So these two arms would go to TASL, and along with Tata Power's assets as well, it will become the defense powerhouse for Tata Sons.
Okay, Nisha, thank you so much for that. But on to some earnings now. Imami posted a mixed set of numbers this quarter. The internals of the company, though, looked a bit strong. Mangalam, tell us, what did the details look like?
Well, optically the numbers looked below estimates when the results came just at the fag end of trade yesterday, but then the press release came after the markets were shut, and there we saw a volume growth of 9% for Imami, and that compared with our poll of 7 to 8%. So there was a bit of a beat as far as our volume expectations are concerned, and as the trend would show, though the volumes grew on a negative base, it was the highest that we saw at least in the last 6-7 quarters. Comparable domestic revenue growth too came in at 12%. We were working with 10.5%, so that was a positive. And the international business that we thought was the joker in the pack, which grew about 37%, accounts for about 10 to 15% of their revenues. So that one led that added kick as far as the top line is concerned. The EBITDA, yes, that one was lower, but then the company explained why. It was because of aggressive spends on the new launches. So if you take a look at the ad spends, they came in 30% higher. Even as percentage of sales, they came in at 16% versus 13.3%. So that is something we will watch out for, because the management has guided this will go on going forward. The net profits a little supported by lower finance cost, but then again dragged by lower other income and higher effective tax rate of close to 31% versus 12%. But if you take a look at the cash profit, 142 crores, absolutely in line with our expectations of 144 crores. Now to the products, 14% growth in Navratna, that's a positive. Kesh King grew 6%. Well, not really the best that one would have expected. But then again, the decline has arrested on Kesh King. Healthcare continues to be a bit of a problem because that one's been led lower by Pancharish. So those are two things I'll be watching out for, Kesh King and Pancharish. The management commentary was pretty good as far as rural growth is concerned. That compares, or that calls it the fourth management in the FMCG space, which says the rural growth is growing far faster than the urban growth, and they expect this momentum to continue into FY19. There is value, but we need to watch out for growth in Kesh King as well as the healthcare range.
Okay, so strong commentary as well as good volume growth coming there for Imami. But on to some earnings that are expected later today. Mangalam, PVR will be reporting its Q4 numbers today. What are the expectations as far as PVR is concerned?
Well, the key expectations for PVR, remember this quarter we had a couple of films. Sonu Ke Tittu, Ki Sweetie did fairly well. That was a sleeper hit, and of course we had Padmavatran continue as well. So we're expecting a 16% growth on PVR's revenues. Remember, the stock ended at the high point of the day yesterday. EBITDA on the back of the 16% growth is likely to grow by about 79%. Margins likely to improve. Net profits seen at close to around 18 crore versus a loss of 5 lakhs that the company had posted in the previous quarter. Remember, this growth is likely to be on account of a couple of things. First one is the strong quarter expected on the back of new screen additions, strong content pipeline, movies like Padmavat, Raid, as well as the one that I spoke about, which has a long name, and healthy box office collections. We'll watch out for higher footfalls and spends per head. More importantly, I'll watch out for what the management has to say in terms of spends per head in Maharashtra, because they had that cap on the F&B spends in multiplexes. So that is something we'll watch out for. And finally, we'll watch out for the average ticket prices. I've been paying a lot more for ticket prices. And yeah, we had Avengers, Black Panther. These Hollywood films are also adding to the box office revenues lately, which is a little more substantial. So we'll keep an eye out on how this goes. But mind you, the stock ended at the high point of the day yesterday. But let's talk Adani Ports now. They reported its fourth quarter numbers. Anisha, how do you read the numbers? Optically, they look fairly good, right?
Well, optically, yes, it looked all right because the revenue growth came in at 43% year on year. But do remember, there's a 840 crore element of SEZ income, which is very lumpy and not a very recurring item. So we cannot take that into account when we look at the revenue growth. Other than that, it wasn't really a very, very positive set because the margins also came down to 54% versus 63% reported last year. Even the net profit now, it optically looks higher than better than expectation at 927 crores versus 900 crores, but that is also led by the SEZ income of 840 crores. Now, to run you through the negatives, the biggest negative for me is the cargo volume growth. Now, the expectations, Mangalam, were anywhere between 12 to 15%. The company came out with a cargo growth of just 6%. Now, even Mundra, if you look at the cargo volume, say it just grew by around 6%. Now, it was expected that because of the slowdown of generation at Mundra power plant of Adani, there would be less number of coal that would be imported, but this number is still below the expectations. In fact, even at Dahej, the cargo volume declined by around 11%. I mentioned about the revenue growth, which included SEZ income. But other than that, if you look at the core port revenue, now that just grew by around 0.4%, so pretty much flat year on year. And this is not exactly what the company was guiding for. Even if you look at the port margins, they have come in at around 72%. Now, the positives that are there in the number is one, that the net debt is reduced by around 655 crore. Now, it's not a very big number, just around 600 crores, but still some positive. They have also given a guidance in terms of the EBITDA margins that they expect to increase by around 100 basis points next year. The dividend payout as well as the capital allocation policy has increased. They have given a guidance for cargo growth of 1.5 times of the total Indian cargo. That is what they set for FY18 as well. But to look at what brokerages say, and there's a bit of dichotomy when you look at their, their views, because Macquarie says that the guidance is lower than expected, while we have CLSA saying that it's a solid guidance. Macquarie also says that the increase in dividend payout is not very meaningful, so maybe it won't really support the prices as we were expecting.
All right, Anisha, thanks a lot for that. We'll keep an eye out on that stock. With that, we'll take a short break, come back, more earnings reviews and previews on the other side. Stay with us.